Sonali Basak, our global finance correspondent, has the latest Wall Street response to the collapse of SVB, and there's a little bit, I guess, of a debate brewing here.
A huge debate brewing. You have the likes of Bill Ackman agreeing with Larry Summers, saying the government made the right actions, but then there's this large chorus also warning of moral hazard. That crew, as you said, includes Ken Griffin, who also believes that capitalism is at risk also. Capitalism is breaking down before our eyes, he told the Financial Times.
Dramatic.
Well, there's a lot of drama behind the story, Matt. And so you have the others, like the likes of Cliff Asness here, saying this creates moral hazard for depositors who no longer think about where they need to put their money. Carson Block of Muddy Waters has the same thing. This is particularly for corporate clients that are more required here to manage their risks. Jason Furman of Harvard Kennedy School, of course, prominent economist, also says that he's less worried about moral hazard, but more worried here about the idea that the system failed. There's this other dynamic also going on, this view, guys, that there is this kind of backdoor QE being created behind that Fed facility created because of holding the bonds at par. This idea that you're still holding 30 to 40 billion or more worth of kind of write-downs here that exist under the system. So are they pumping the system with more liquidity? Is this an inflationary impact just at the time you don't want to see it? So a lot of concerns about the distortions to the market that are created by what we've seen done over the weekend.
Okay. A lot of big voices then raising questions about what this means for markets, what it means for global capitalism. What about whether we are heading for a major financial crisis? I know that Michael Burry of Big Short fame doesn't think so.
Yeah, he doesn't, and there's other people who have different views. You know, on one hand, you have Bill Ackman thinking more banks will fail. That's a pretty popular view out there, thinking that more banks will feel stress under these kind of tighter liquidity conditions. But like I said, was that liquidity just eased in a major enough way? On the other hand, you have Guggenheim's Ann Walsh, the CIO there, who believes that this was a bear moment, that this could have been a bear moment, that this was kind of early 2008 where there's a harbinger of more things to come. Remember, a lot of people are pointing to the fact that this is not the first liquidity-induced kind of crisis here. You think back to what happened in the pension funds in the UK just months ago, and you're seeing drips and drabs of unintended consequences. Most people would have told you that they didn't think that this was the canary in the coal mine, but there are concerns still under the market about what comes next.